Thanks for having us. I'm Perianne. I'm the founder and president of the Chamber of Digital Commerce. Today, we're going to be talking about the enterprise and institution. We have an awesome group of speakers. We're going to kind of break it up to talk about one, the enterprise, and then two, we're going to dig into some of the financial services topics, given who we have up here. So we have not a lot of time, so let's do like one 20-second introduction, each speaker, starting with Michael.
Thanks, Perianne. So I'm Michael Terpin. I started BitAngels as the first distributed angel network for investing in Bitcoin-related investments in 2013 with David Johnston, chairman of Factum, a well-known investor, and we're expanding it now into multiple cities. We're in about 20 right now. We're looking to get up to 100. That's my other position as I run the Transform Group, which is since 2013 the oldest, largest marketing and advisory firm for blockchain companies.
Great. I'm Adam Healy. It's right on our board, but contrary to what it says up here, I work at Bakkt, so not a big deal. But I run the security program at Bakkt. That includes everything from our custody product to our retail consumer product to physical security, kind of all of the different pieces that kind of make up a full spectrum security program in the crypto space. Before that, spent some time in West Coast startups out in the Valley. Spent a little bit of time at Microsoft, and then kind of more or less grew up kind of in the government space down in DC, specifically in the Intel space.
My name is Brooke Stoddard. I'm the director of sales at Grayscale Investments. We're a firm based in New York. We manage about $2 billion in assets and help institutional investors and other investors get exposure to Bitcoin through the Grayscale Bitcoin Trust and other digital currency trusts as well. In my prior life, I spent 10 years at Goldman Sachs, so I come from the traditional portfolio management world, and now I help investors to think about a relatively new asset class and add Bitcoin to their diversified portfolios.
I'm Joel Waite. I'm the COO at Medici Ventures, which is the blockchain accelerator arm of Overstock.com. I've been there for about 3 years, and we're focused on action in the identity, capital markets, supply chain, property titles, and voting spaces. And so we've seen a lot of pitches of companies looking to use blockchain in the enterprise.
Awesome. So starting with the enterprise, of course, the first application of blockchain technology was Bitcoin, a peer-to-peer electronic cash payment system, but as we're seeing more and more companies innovate with blockchain technology, we're seeing new applications beyond cryptocurrency and even outside of financial services. What do you guys see as the most appropriate industries for enterprise adoption?
I think there's number ones, and they keep on layering out. In the beginning, you had Bitcoin, which was really store of value and some payment. Then you had faster payment systems, and obviously every company, every enterprise needs a way to go and seamlessly track and pay 200 different nations and have settlement, either internally or externally. So payments is still huge. And then you get supply chain management, you get smart contracts in general. With the dawn of Ethereum, really exploded a whole new set of use cases. And I think right now, the biggest issue in enterprise is the inevitable move, I'd say, from everything being built on DLTs because of fear of public blockchain, to moving toward just having encrypted layers on top of Ethereum and other public blockchains. It reminds me of the days in the early internet when Walmart would never think of being on the internet. It's too dangerous. They'd have to build their own intranet. And I think that 10 years from now, you're not going to see an awful lot of things built on Hyperledger.
I think that question is kind of like asking what's the best enterprise for the internet or the best use of a database. I think we'll see adoption in all aspects of business over the next few years or decades even. Where does it fit best now is probably wherever you have multiple parties that don't necessarily want to trust each other but need to share data. So wherever that happens, which financial services we've talked about and touched on, but plenty of other areas as well.
Yeah, absolutely. And at Medici, you guys have a number of portfolio companies that are innovating across the enterprise. In terms of the companies that you guys are involved with, who is the furthest along in terms of adoption and implementation of the technology?
The first one that comes to my mind is probably Grain Chain, which they're dealing with grain commodities trading in Texas and Mexico. They just landed a deal to cover 2% of all of the coffee industry in Honduras. And they're using smart contracts to allow for the instant exchange of value for the title to the grain or to the coffee, so that currently in Texas and Mexico, they just use paper. And the Attorney General, or the Agriculture Department will fine the brokers because they don't have title to the grain before they sell it. And with Grain Chain now, the farmers get... My mic is dead. Okay. The farmers get paid, which is a risk, and they have title to that grain and can resell it immediately as soon as it crosses the pay scale.
Yeah, and actually, we will have Grain Chain at our conference in March, the DC Blockchain Summit. They're coming and they're going to be debuting that to share more detail. Agriculture's certainly interesting. Supply chain, of course, IBM with TradeLens has been quite public about the success there. Adam, what say you? What's interesting from your perspective?
I think it's still very early. Yeah. I think the promise of blockchain is 10x, not 10%. Innovation, efficiencies, cost savings, things like that. I look across the kind of what's going on in the space, and I haven't seen anything that's that exciting. It seems like we're making incremental steps, which isn't wrong, in my opinion. We have to make those steps to get to that 10x return. But I think if we look at how it's being implemented, where it's being implemented, where Walmart was mentioned and things they're doing, Monsanto and others, I just don't see. I think it's still like year zero. I don't really see it as adding that 10x.
We're still at year zero.
Yeah, for enterprise in the blockchain. I don't think you're going to be able to, as complex as some of these back office systems are. I mean, there's massive FIs that all of us know that are still using mainframe technology. That's 20, 30 years old. We're not going to rip out relational databases in any meaningful way in the next 5, 10 years. I think it's going to be a much longer glide path, because then it's not only a technology problem, it's how do people audit it, how do auditors get comfortable. I mean, it wasn't that long ago where it was very difficult to get a Big Four accounting firm to audit a crypto or a blockchain company. That's only a new, relatively new in the last few years.
And we still don't have accounting standards.
Exactly.
Still.
Exactly. And I just mean not even like financial audits, but just getting a SOC from a Big Four firm was very difficult to do just a handful of years ago.
Expensive.
Yeah.
It's kind of ironic because the audit's already there and it's immutable in most cases. But.
Such a good point, right? Well, I guess getting the regulators and the institutions to acknowledge the blockchain as the sole record of truth is such a huge shift from what they're used to. So you have the cultural issues to work through. Adam, given your technical perspective, you talk about the mainframe, which is kind of funny. Like, how do we transition to the mainframe to something as innovative as blockchain and DLT? What does the implementation process look like to you? How do we transition to having a single source of truth, a single record of truth, whether it's a public blockchain or what else?
Slowly and thoughtfully, and that's the unfortunate realities of it. Like I think everyone in this space, or that's heavily involved in this space, wants to disrupt. We want to move fast. We want to break things. We want to implement. We want to build cutting-edge technology. But unfortunately, that's not how enterprises work. They generally take a very risk-averse approach, very thoughtfully, very methodically. We'll step through these things. I mean, you can just look at something like cloud. I mean, I remember before cloud was even called cloud, and when Google Apps first released some of their compute engines to the public in 2005 timeframe, I might have that date slightly off. I was told by the CTO of a very large organization, no organization will ever trust another company to host their own email. Now everyone does it, but that's taken years, and some still aren't there yet. So I think we could use things like cloud as kind of the design pattern for how quickly things will move, which will be slowly and thoughtfully.
Mark Andreessen, I think it was in 1997, pronounced cloud will replace client server when he started Loud Cloud. He got laughed at for the same reason. And nobody thought a little startup like Salesforce would have a chance against SAP for the same reasons. And it's the innovator's dilemma. And historically, the innovators with a better product compete against the big guys who don't want to move. I mean, one reason why the big four don't want to recognize blockchain as immutable truth is like, what do they bill for? Yep, it's true. Okay, I just spent 10 minutes on it. They have to go and have their billable hours. And so it's the innovator's dilemma, and those who...
The rent seekers, we love them.
The rent seekers, right? And unfortunately, I mean, that is going to be something that goes away eventually or gets... Look, IBM had to make the decision to like stop making the PC and sell it to Lenovo. Stop making as much money on mainframes and go to the next thing. And they bought Red Hat for $38 billion years after they laughed at Unix. So the real progressive institutions are the ones that embrace the future and figure out what's the right time to stop fighting and start leading.
But I think that takes time and proven technology. And I think one of the big things that at least I don't see in this space is at scale, productionized use cases at Fortune 500 companies running on blockchain. I haven't seen that anywhere. And I still think, to my point earlier around like year zero, I still think we're a long way from that.
Are you bullish though?
I am. So I mean, that's the bet, right? That's the bet why I'm in the space. That's why I spend a lot of my, I don't have hair anymore, but that's why I spend a lot of my time worrying about.
Would be gray hair.
Yeah, when I did have hair, a lot of my time worrying about these things and trying to contribute to the ecosystem, because I am very optimistic for it. I just think we have this dichotomy within the space where we have. On one side of the group, we have people that want to move very quickly, that want to build all these innovative use cases, and they don't realize it's not that easy. If you want a Joe's Laundromat to accept Bitcoin, it's not that easy. They have banking, they might be essentially an unregulated entity, but they have a business license from the state. They have banking relationships that are federally regulated. They have all these other pieces. So I think that's one side is we want to move quick, deploy technology, get to the next iteration of the financial system or whatever we're trying to disrupt for everyone's individual companies. Then the other side is, in order to do that, you need buy-in from the big players. There's no way you're going to actually disrupt the financial systems without buy-in from regulators, from auditors, from large financial institutions.
So maybe let's talk about some of the different blockchains available today that are being marketed and built, so to say, for the enterprise. Michael, you mentioned Bitcoin. One of the criticisms of Bitcoin is scaling and throughput capacity. Same thing with Ethereum. What do you guys see as the
We're in 1995. If you want to look at an adoption curve, we have about roughly 50 million users of public cryptocurrencies in the world. That's about the number of users of Bitcoin of internet in 1995. 1995, Newsweek did a full-page editorial saying that the internet was a joke. Nobody's going to read their newspaper on a computer instead of a fine, shiny, glossy magazine like Newsweek. 25 years later, Newsweek's gone, and there's 4 billion users of the internet. And nobody talks about, I'm an internet user. And same year, I had a conversation, or actually a year earlier, with one of the head guys at NBC who said, NBC will never be on the internet. My mom will never use the internet. She's not going to put a second phone line in. She doesn't want to get woken up in the morning with something going bing, 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 bing. The GUIs change. 10 years from now, you won't even recognize it because it's all going to be built in. And you talk about the regulations and the adoption curves and things like that.
But is it all going to be built into Bitcoin or something?
No, into various different public and private blockchains.
The internet, right?
So Bitcoin is really going to become store of value. Bitcoin will not be used for payments. It's too slow. Andreas Antonopoulos, is a major thought leader in the space, said he believes in a world of, he's not a fundamentalist on Bitcoin or a maximalist, he believes in many coins, one chain. They'll all be able to interchange value very quickly, very seamlessly, travel rule and when it's in certain things in the wallet to wallet, but you're going to have whatever the best use case is. And if Ethereum is too slow, something faster that will also do smart contracts. It's all open source software. There's already 30 different variants of Ethereum like Loom. I'm working on a project called Aspire that is with Jim Blasco that's going to be doing faster, smarter, secure smart contracts using an Ethereum code base. We have just begun innovation. 1995 is when you found the first real audio to put audio on the internet. That year was when Mark Andreessen started going around after getting funded from Netscape and didn't go public a year earlier. And he said, I got all this money and I got this great technology. I'm going to go to Macy's and say, go on the internet. And he got laughed at. Why would we want to drive people out of our store? And besides, nobody would ever trust the internet to put a credit card company on. So all of these things are just...
And you still trust it now.
Right. It's just every single problem today is $1 billion opportunity for a new company to solve it. Oh, you can't put a credit card on? Hello, VeriSign.
So let me be like slightly less contrarian, I guess, than I have been so far. I think you've hit the nail on the head, which is the utility side of it. There needs to be a utility for adoption to occur, whether that's consumer retail adoption or enterprise adoption. And sometimes you have to have both of those things together for either one to be fully adopted. And I think you're right. It's Bitcoin. While some may want to spend Bitcoin to get things, others may not. And we do a lot of work, and I think it's most people that know Bakkt know that we are partnered with Starbucks and building some interesting technology around there in the digital asset space. And that is kind of one of the investment areas from very large enterprises. Right, Bakkt is owned by Intercontinental Exchange, sister company of the New York Stock Exchange, and then Starbucks kind of coming together to try and build that utility. But it's taken us over 1.5 years to get there, and we're still not quite ready for launch.
Using Bitcoin to pay for something in the United States when you already have credit cards and debit cards is not a killer app. I think the first killer app in the first world is going to be gaming. Angry Birds blockchain, something like that. If you can go and play something you're already used to playing with, and you can win like prizes and things that end up being worth cash within a regulated environment, and certainly the world where gambling is fine. Right now, some of the most adopted games in the rest of the world are, like Satoshi Dice was the first big hit for Bitcoin. And so I think that you're going to have, particularly when it partners with Hollywood. William Shatner has said he's now behind a digital goods company. They're going to let you buy Star Wars collectibles. That's an area that digital goods and digital collectibles is just at its nascency. When people say, I have to have it because it's cool, that's your Uncle Milty moment, that's your Snake on the phone, that's your Angry Birds in the App Store moment. The App Store started out with like almost nothing, and it grew to like billions of applications, even if the top 10 are still half the traffic.
Talking about adoption, Brooke, gonna turn to you. Grayscale had an announcement this week. Over $600 million invested into Grayscale in 2019. The company came out and said this is a signal that institutional adoption is happening. What went into that statement? What are the signals that you guys are seeing from the institutional investor?
Sure. So when I think about financial services as an industry and the way that banks and other financial institutions are investing in blockchain technology to make their firms better and to make the lives of their clients better, I think one of the first ways that they get exposure to blockchain technology is through investments in Bitcoin. And what we do at Grayscale is we offer a security that tracks the price of Bitcoin over time. And that's just one way to get exposure to Bitcoin as opposed to buying Bitcoin directly from an exchange or holding your own keys. And something that we're really proud of is in the past year, 71% of the capital that we raised into the Grayscale Bitcoin Trust and some of our other digital currency products came from institutional investors. So these are new types of investors who are taking their own capital and buying Bitcoin with it. And we think that that is part of the story that will be told in terms of mass adoption of Bitcoin.
So in financial services, a couple other interesting things happening over the past couple of weeks. CME launched options. Also CME announced record futures contracts. Adam, given that you're at Bakkt, just interested in your take on the news from the CME.
I think on the option side.
Yeah, starting with options, then we'll get to
I think on the option side, they're catching up to us.
Okay.
So we launched options first.
Note.
So, it's always, it's a great compliment to be copied.
I agree.
But no, CME, I think CME's they have a great product, right? I think the flaw with Bitcoin adoption is that it's cash settled, and I'm kind of shooting myself in the foot because we also launched a cash settled contract on ICE Futures Singapore to provide investors that want no Bitcoin. They don't want to be able to take physical delivery of Bitcoin, and they want to still have exposure to the futures markets. So I think things like CME, Bakkt coming to market, we have a laundry list of things that we're going to be launching, both for the institutional side and for the retail consumer side, well beyond just being able to spend Bitcoin at Starbucks. There's going to be kind of a whole litany of other, I would use the term very broadly.
Wait, you just said
assets.
spend Bitcoin at Starbucks. Is this official?
It's it's something that has been widely discussed about why Bakkt is working with Starbucks. How could they accept digital assets, Bitcoin being one of them?
As I recall from the announcement, unless it's been the original announcement, is that they would go in and they would have Bitcoin then converted to cash, and then the cash goes to Starbucks. So once they actually put Bitcoin
I'm
on
very
the balance
eager
sheet,
to
it's
see how
different.
this is going to work.
Yeah.
I know we all
so
are.
the mechanics of it are complex, and largely because of the overarching federal regulators that are involved and the federally chartered FIs that are involved. It's complex, and the way it's not as straightforward as it would be, because again, you have to have all of these different massive entities for any type of transaction in a retail space, especially a retail space, because there's so much focus on protecting the consumer. So the mechanics of it, to me, don't really matter as a consumer, because it's something that we use a lot at Bakkt is the spouse question. Would my husband, would my wife use this? How would they use it? They're not going to be managing their own private keys and having crypto steals and ledgers and doing stuff. Abstracting away, to a point that was made earlier, how do you abstract away the complexity of dealing with all of this and allow a consumer to transact full stop in any digital asset they want?
I think the day that I can go to Starbucks and buy a cup of coffee with Bitcoin, we have arrived. Going to futures, though. So cash settled versus physically delivered. Given you're the expert on this, talk us through the difference in the pros and cons, and then maybe we'll talk about kind of the activities happening in the market on both sides.
Sure. So for an investor that wants to have real Bitcoin exposure and take delivery of a futures contract, they can do that much like anyone who trades on ICE futures for coffee or orange juice or cotton or anything else. There is a warehouse somewhere where if you take delivery of a coffee contract, somebody comes and brings you your 2 tons of coffee. And for the Bitcoin space, why that's important is it's actually a price discovery engine on a federally regulated exchange. So right now, the only futures contracts that have end-to-end regulated price discovery are the Bakkt contracts. Even the CME contract requires basically an index of unregulated spot exchanges to drive their price. So what we saw was the opportunity to first launch a physically settled futures contract, much like the Brent oil contract that ICE launched years ago is now the global standard for Brent pricing. We did that because that was foundational to our business. However, we also launched a cash-settled contract, slightly different but similar to CME's, because there are investors that do not want to risk taking physical delivery. They actually do not ever want to hold Bitcoin. So a cash-settled contract provides them the opportunity to still have some Bitcoin exposure without the they would see it, I wouldn't agree with this, but they would see it as the potential risk of actually holding Bitcoin. And that could be regulatory risk or other types of concerns around custody.
Well,
and
they
things
probably
like
don't
that.
want 2 tons of coffee delivered either. I guess you just sell it before it gets delivered.
It depends. Like coffee delivery, cattle delivery, these things happen every day, right? If you, the interesting thing about our contract is it is on a federally regulated exchange. It is if you drink orange juice, wear cotton, drink coffee, eat corn, most likely that asset was traded on an ICE exchange. And right next to it, and talk about arriving, right next to it, there's the Bitcoin contracts being traded on the exact same federally regulated exchange. Now, to take delivery, you have to have a warehouse contract with the Bakkt warehouse, and contrary to some of the speculation out there, it is real Bitcoin, and we do allow investors to actually withdraw to their own private keys, to their own wallets, if they desire that.
And what is the market telling us? Cash settled versus physically delivered. How do the volumes split?
So I think it's too early to say. I think right now the way it sits is The majority of institutional investors that are trading futures contracts do not want to take physical delivery. They do not want, they would much prefer to have a cash-settled contract for pick your reason why. The majority of that volume sits on cash-settled futures contracts from CME. We're seeing that slightly shift. We're seeing some opting into the physical settled contracts on ICE Futures US, and then we're seeing some volume starting to spike on our Singapore contract, which is cash settled. So our goal was to provide a end-to-end regulated environment, allowing institutional investors to trade however they wanted to trade.
So I read an article, the microphone is in and out. Are we done? You guys want to hear me? Can you hear me now?
Yes.
Good. Okay. Is this one out too? No. Okay. So I read an article just yesterday about a Dutch exchange, Deribit, and it said 80% of the futures contracts are being traded on this Dutch exchange, and is actually in the process of moving to Panama. I'm just interested in your take on that. I mean, is it really 80%? Do we actually have real access to those volumes? Does this sound accurate to you? And if so,
it's hard to say. I won't speculate on what their volume is compared to the larger market. I would say that to get real institutional investor, think top 10, banks, top 10 FIs, top 10 hedge funds. Those types of legal structures are regularly questioned. And you talk about year zero, kind of in this space as well, right? If the top 10 hedge funds put a handful of basis points each into Bitcoin, they would immediately overnight become some of the largest holders of Bitcoin in the world. Like, that has not happened yet because some of the, I would say the plumbing, such as these questionable legal structures or questionable jurisdictions that these exchanges operate in, causes pause. Like, you can't go to your LPs and say, I'm trading on a Panama-based exchange with no KYC. Like, and I don't know if they have KYC or not, but that's an issue.
Yeah. Interesting themes we have seen throughout this space through many cycles at this point. Brooke, I'm going to go back to you on Grayscale. Just walk us through the structure of the fund, who your target investors are, and the process to exit and the opportunities there.
Sure. So Grayscale Bitcoin Trust was created in 2013, which means it's been around for over 6 years. Today it holds over 1% of Bitcoin globally on behalf of our clients. And clients can get access to it in two different ways. Some subscribe to a private placement offering for Grayscale Bitcoin Trust, and others purchase those securities via the public markets under symbol GBTC, which is often one of the most liquid symbols on OTCQX, or the top tier of OTC markets.
And then the option there to exit, there's a premium. So how are investors taking advantage of that? And do you see this as a trend that will continue, or do you see those premiums condensing over time?
Sure. So GBTC, the beauty of it is that it trades like a stock. And so anyone in a Fidelity account, Charles Schwab account, E-Trade account, pick your brokerage firm, can buy GBTC as a way of getting direct, long-only passive exposure to the price of Bitcoin over time without the challenges of buying Bitcoin on an exchange or storing it or worrying about custody. Historically, since GBTC started trading in 2015, it is traded at a premium to the net asset value of the trust. Today, the premium is about 15%, and that price is just dictated by the market.
A lot of interesting stuff coming down the pipeline. Please help me in thanking all of our speakers and our panelists. Gentlemen, thank you for your thoughts and your insights.